Welcome back, investors. Jake here. Okay, maybe I shouldn't be using the word investors since nothing I'm doing in this video closely resembles investing. I'm actively trading, and more, even to me, it feels like gambling. If you're not familiar with the short position I've taken on the NASDAQ the last couple weeks, maybe check out this video. I finally shorted the market, buying puts on the QQQ. And the theme of this video is going to be good news, bad news. So whether you're long on the markets or short on the market currently, there's good news and there's bad news. And the bad news for me first for my short position is that the QQQ, the NASDAQ, was up 2.4% this week. But the good news is that on Friday, it actually dropped 1.75. So it was up higher and it actually pulled back. And I'm going to admit to you guys in this video, I'm going to be really honest with you. I bought more puts on the QQQ on Thursday, right before the drop. And the arguments I have to make for you, I'm going to defend my short position. I'm going to continue to hold it. But if I'm comfortable shorting the market when the QQQ is at 280, then I really need to be comfortable shorting it when it's at 307. So for my active trading accounts, this is going to get ugly, but the current value is actually down to $16,000. Now on Friday, I did see a gain of $2,000, but because I'm buying put contracts with options, when you leverage your money, everything can go to zero. So all of these contracts expire September 16th. That's roughly in about 50 days. And combined, I now own 21 put contracts on the NASDAQ. What does that mean? That means that I'm controlling the price movement of the stock, or in this case, ETF. And when you add up these 21 contracts, each contract controlling 100 shares of QQQ, and the current share price value of QQQ being 301, I'm controlling about $630,000 worth of ETF shares by owning all of these put contracts. And sure enough, I was shorting the market when the QQQ was at 280. I kept buying more at 290. And on Thursday, I bought more when it was at 300. So thankfully, my 300 strike puts are up 10%, about 680. But as the QQQ keeps rising, these contracts go down in value pretty dramatically, pretty fast. So down 56%, 64, 59, 44. But as you can see on Friday, the one-day change, they all gain back some value. So if there's a big swing in the NASDAQ next week, all of these will go up pretty dramatically. I'm not joking in that I could easily double or triple up this account in the next 2 or 3 weeks if my trading thesis is correct. So good news, bad news for the markets. We'll start with the good news. And the good news is if you own shares of Netflix, you are up this week. Netflix 3 months ago predicted that they were going to lose about net 2 million subscribers this quarter, and they only lost 970,000. So they beat expectations by only losing 970,000 customers, and that was seen as a positive. Their revenue also did grow 9% year over year. They beat on their earnings expectations. So it was a good week for Netflix, up 14%. But when you zoom out and look at the big picture for Netflix, it doesn't look good. The stock peaked at almost $700 last November, and it's down 68% over the last 8 months. Next piece of good news is that Tesla shares jumped on a second quarter report that was better than feared. Because Tesla is an automotive maker, they have lots of labor issues, supply chain constraints, inflation costs, and they still did pretty well given, once again, the COVID lockdown in China and that their manufacturing capacity was really hurt. So Tesla had a good week. It was up 11%, but once again, big picture zoom out, the stock peaked at 1,200 in November of last year, and it's still down roughly 33%. but still a good week for Tesla. All right, another piece of good news is that Russia has resumed gas flows to Europe through the Nord Stream pipeline. I did say in my last video that I thought Russia was going to permanently shut down the pipeline while they continue their war in Ukraine. If they cut off their energy supplies to Europe and Germany especially, that would be a very bad week for the markets if we got confirmation that this pipe was going to be down forever. I still think it's a possibility as this war drags on that eventually Russia will get desperate and they will decide to shut down this pipe. The next piece of good news is that Russia and Ukraine have signed a UN-backed deal to resume grain exports via the Black Sea. Will Russia stick to this agreement and not attack these grain ships trying to get their grain exports out from Ukraine? I hope so, but there's a war going on and Russia lies about absolutely everything. So potentially we averted a global famine by getting these grain exports out. This was set to affect hundreds of millions of people, mostly in the Middle East and North Africa, later this year. And Russia and Ukraine are still not producing as much grain as they should be for food exports to other regions of the world, meaning that food prices are still going to be elevated for the rest of the year, but potentially we're not going to experience as disastrous as a famine as potentially we would have seen if Russia did not agree to cooperate. All right, so that was the good news. Let's now pivot towards the bad news for the market. And the first one is that central banks around the world continue to raise interest rates. This week, the European Central Bank met, and this is what's going on in Europe. The European Central Bank's rate hike brings its deposit rate to 0%, having remained in negative territory since 2014 as the common currency bloc dealt with the sovereign debt crisis and the pandemic. So interest rates in Europe were actually negative, meaning they were paying people to borrow their money in order to stimulate the economy. They've raised interest rates to get it to zero. No more paying people for free money. I guess this is bad for Europe, as once again, this will probably lead to an economic slowdown on the continent. But honestly, this is what Europe needs to do in order to prepare itself for this winter, as potentially there will be energy shortages. Governments in Europe have stated that if there is energy shortages, priorities will be given to citizens, individual homes, and more than likely it'll be industry that will just have to idle their factories. So this is going to affect the markets. This is going to affect global GDP and growth rates. And, if this war does not end soon and we can't get inflation under control and just get back to business as normal, eventually the stock market will realize potentially this will be a bad winter. Next piece of bad news is that home buyers are canceling deals at the highest rate since the start of the pandemic. And this is a consequence of, once again, the Federal Reserve increasing interest rates, making it more expensive to get a mortgage on a home. There's a big difference between a 30-year fixed rate mortgage at 4% and a 30-year fixed rate mortgage at 6%. And the Fed is going to meet this week once again. There's speculation on another either 75 basis point or 100 basis point hike, meaning if you want to buy a home, you're looking at maybe a 7 or 8% interest rate in the coming months. It's just going to affect the housing markets when there's fewer buyers out there that can afford a mortgage. So expect potentially housing prices to come down just a little bit. The big piece of bad news, especially for the NASDAQ that hit on Friday, was the earnings from the company Snapchat. And Snap shares plunged on a disappointing second quarter results. And basically they just said, macro headwinds as advertisers are reducing their advertising budgets. So this was the canary in the coal mine for a lot of other stocks that are also heavily dependent on advertising revenue. So for the week, this was a bad week for Snap, down 28%. Market cap is only 16 billion, so it's not a very big company. But Google, remember the NASDAQ was up for the week. Google was net down 4.1 as Google is heavily dependent on advertiser revenue. So you can see just on Friday, shares of Google were down 6.3%. They're giving their earnings next week. Pinterest was down 12% for the week, down 14% just on Friday. And Meta was actually up. Meta's the other company heavily dependent on advertiser dollars. But you'll notice that it was up big Monday through Thursday, and then after Snap gave their earnings, Meta was down 7.5% on Friday. Now, I said this in my last video, but the one stock holding up the entire market is Apple. And we did get news out of Apple this week. According to a report from Bloomberg, Apple is reportedly planning to slow down their hiring going into 2023. I think all the big tech stocks and all the large cap stocks have basically made this same announcement that as we head into a more fiscally tight era this winter, they want to pause hiring and focus on the staff they already have. But Apple was still up 2.1%. This Bloomberg article hit on Monday. Apple dropped 2.8%, and then everyone just kept buying Apple. So what the heck is going on with Apple? And everyone is buying Apple because expectations is that Apple is likely to meet their Q3 results. So Apple doesn't actually give guidance anymore, but Wall Street still makes their own predictions. And everyone is buying Apple. Dividend investors, growth investors, mega cap tech, people will even call Apple at this point a value play. And this is going to make or break the NASDAQ this week. Apple reports, I think, on Thursday. So, I'm going to live or die by these results. And if Apple blows it away for some reason, I'm screwed because there's going to be a buying frenzy for Apple. It'll shoot up along with the rest of the NASDAQ stocks because when people buy Apple, it's pretty much a green day for the market. However, if Apple just kind of fizzles, comes in line or disappoints, expect it to be a bloodbath on Friday. So here is the S&P 500. This is the 5-year chart. I show this in every video. This purple line is the 200-week moving average. And I'm confident that the market, the S&P, has not bottomed out yet until we get under this line. I think at that point we will find support in the market and we'll get out of this down channel. So this is tradingview.com. I've been charting the S&P for you every week, going back 6 or 7 months. And we've been locked in a down channel since the market peaked last November, December. And we're still in the channel. However, the S&P finally did something different. I've explained to you that previous levels of support often become new lines of resistance. For individual stocks, this is true. This is an ETF. It's the entire market. It's not as strong as a rule because people generally don't set buy and sell limit orders for the entire market, but they do this for individual stocks. However, in this down channel, it's kind of like this staircase pattern with nice round numbers. And the previous level of support for the S&P 500 was 3,900. And it turned into a level of resistance. The S&P bounced off it June 27th. It bounced off it July 7th. But we broke through it this week, which is kind of a bullish sign. I'm actually very impressed. Now, I have not shifted this line for you since my last video, so where the upper end of this range is, I can't be 100%. The bottom side of the range is much more strong. So I argue that we're still in the channel, we're still in a downtrend, but perhaps what might be coming for the entire market the next couple weeks is a pullback, but a pullback that does not create a new lower low. So let me draw this in, and I'm going to start making predictions for these stocks. But I think over the next couple weeks, the market will pull back, and it might pull back to maybe 3,700, but potentially find support. Now, I've been predicting for the last couple months that the market will bottom out sometime in September or October below the 200-week moving average. But this is kind of a bullish move, and potentially the entire market could find support at around 3,600 for the S&P, and will stop creating new lower lows on the chart. Unfortunately, I am not shorting the S&P 500. I'm shorting tech stocks. I'm shorting the NASDAQ. So let's actually just blitz through all of the charts for the top holdings of the QQQ. This would be Apple making up 13% of the ETF, Microsoft, Amazon, Tesla, Google, Nvidia, Meta, Costco, Pepsi, and I think the next one is Adobe, so we'll toss that in as well. So I'm going to show you the charts and what I see currently for all of them. The first one being the QQQ, it looks similar to the S&P, except it's a bit more steep. However, you'll notice that depending on where you want to draw this line, it certainly looks like the QQQ has broken out of the channel. And perhaps we're creating, this is a very short-term potential uptrend here, but perhaps we're creating a higher high on a new trajectory. So I am going to be very fascinated to watch this next week to see if the QQQ breaks this and potentially retests the low at around 270. If the QQQ gets back to 270 or 280, I'm going to cash out all my puts for profits and just get out of my position. I'm sweating bullets over here, being 100% leveraged in my active trading account. All right, so the stock to watch, the stock that's going to make or break everything is Apple, and I'm calling BS on this stock chart. This makes no sense. Just straight up for 5 weeks. I'm not even exaggerating. Let's just pull it up here. Apple stock, how much has it gone up in the last 5 weeks? And Apple has gone up 18% since June 16th. 18% for the largest stock in the S&P 500. That's $500 billion in market cap valuation. What has Apple said or done or released to justify an increase in value of $500 billion? The only news out of the company is that they're not going to be hiring people for the rest of the year. I'm ranting here. I'm a little bit bitter at everybody out there buying Apple for no reason, but I hate this stock chart. This doesn't make any sense. So my prediction is that this slope line, and I did not add this, this was in my video from last week. You'll notice the market peaked for Apple January 3rd, but you could argue the downtrend started December 13th, and we're bumping up against it. I thought the nice round number of 150 would hold. I bought puts, let's see, on Thursday when Apple touched this line. I was looking at the chart. So if Apple has a great earnings report on the 28th, we're probably going to go above this. But if it's just so-so, or if it's disappointing, then Apple's probably going to crash. It's probably going to go back and retest this level at 135. So I'm going to draw in this line. Let's actually make these lines black to give it some different anticipations. So that's my prediction. I don't know if Apple will create a new lower low going below 130. I drew in this level of support down here at 120. But it has to start, if it is in a new uptrend, there has to be a pullback creating a higher low. So stock charts look like this. You have the lowest low, a new higher low, pulls back, next one. So this is what a stock chart normally looks like. You create new higher highs and new higher lows in a new up channel. This is how the market trades. But just going straight up like nobody's business, I'm calling BS on that. All right, let's pivot and talk about the rest of the stocks real quick. Microsoft is interesting because Microsoft has been once again in a down channel since last November, and we're bumping up on the top of the range. So either Microsoft is going to have a good quarter, they report on the 26th, it could potentially get up here to 275 and experience resistance, or it could sell off, retest its lows at about 242, or it could create a new lower low. Amazon is kind of a boring stock at the moment. I think it's range bound, trading sideways between the nice round numbers of $100 and $130. They're giving their earnings on the 28th. If it's a bad quarter, it's probably just going to sell off and go back to this 101, 102 range. Tesla broke through a significant level of resistance here at about 760. Potentially, it could get up here to 880, find levels of resistance, and then start selling off again. However, we have created a new shorter-term uptrend. You'll notice we create higher lows, higher lows. So Tesla, and I'll just draw in some lines here, could potentially get up to 880, and then at some point there might be a selling, and then it goes back to this new uptrend line. There is a longer-term downtrend slope that started when the market peaked in November. So I think Tesla could potentially start forming this pennant pattern where it creates, let's see here, this zigzagging pattern, and then these two lines eventually will converge. With Google at the moment is range-bound between about 105 and 120. Google's earnings are on, let's see here, the 26th. I don't see Google falling that hard, even if they give disappointing advertiser numbers. I think for sure buyers would keep appearing and snapping up shares if Amazon or Google gets anywhere close to $100 a share. Oh man, we're going through a lot here, guys. Nvidia is range bound between 140 and 200. I think it's just going to keep bouncing between these two numbers. They're not giving an earnings report until August 24th. Meta, also kind of boring, range bound between about 160, and I think the upper limit here is 220. If Meta has a bad quarter, they report on the 27th, I could see this falling to 150. That's a nice round number. I think buyers would step in. Costco, I don't think I've talked about this in a long time. Costco has peaked at $600 a share. There's a level of resistance at 560. It bottomed out at 420. Haha. And there's a previous level of resistance here at 480 that I think will become a new line of support. So potentially Costco could become range bound between about 480 and 560. Pepsi. I don't think I've ever talked about Pepsi or shown their stock chart. And Pepsi does not move a lot. This range between 150 and 175, Pepsi doesn't move that much. But there is a longer-term uptrend slope that is pretty interesting going back to about 18 months. But there appears to be a level of resistance here at 175. So if the market panics and there's a sell-off, I could see Pepsi pulling back to this uptrend slope, and then eventually it will just recover and keep bouncing off 175 for the rest of the year. Finally, we have Adobe. This stock peaked at $700 a share. Adobe has fallen hard. I would argue there's a level of resistance here at about 500 and another level of resistance here at 420. I'm not making this stuff up, guys. The people who work on Wall Street are just as immature as the average person on YouTube. But it appears that potentially Adobe has maybe bottomed out at 360. Otherwise, if Adobe, which doesn't actually report until September, but if the entire market panics and sells off, I could easily see Adobe making a new lower low as it starts creating, it just continues this downward channel that it's been in. All right, that's all for the biggest holdings in the QQQ. Obviously, there are lots of smaller junk tech stocks that dilute their shareholders and don't make a profit that could report really bad quarters, but they're just not as significant as the mega caps as far as the QQQ. If you want to look ahead to who's reporting next week, I'll link this down below. This is the NASDAQ.com market activity earnings calendar. And Monday, not really any significant companies reporting. Tuesday, July 26th, after the bell. That's what this moon icon means. We've got Microsoft, Google, and Visa, Coca-Cola, McDonald's, and UPS reports before the bell. So there's going to be a lot of trading activity on Tuesday. We're going to have a lot more information about the economy and what investors are thinking for the future. Wednesday, July 27th, Meta and Qualcomm reports after the bell. T-Mobile and Bristol Myers report before. And Thursday, July 28th, this is the big day. Apple and Amazon after the bell. MasterCard, Pfizer, and Merck before opening bell. And then Friday, a couple more companies all before the bell. ExxonMobil, Procter & Gamble, Chevron, AbbVie. It's going to be a crazy week. This is going to make or break. I'm 100% holding, and this account can go to zero if the market does not create a new lower low or retest its lows from about a month ago. Oh, guys. All right, that was a lot. There's a lot going on. My heart is thumping here for this week. This is going to be crazy. All right, that's all for this update video. If you found it informative, give me a thumbs up. Questions or comments, let me know down below. Till the next video, take care.